What is up, everybody? Happy Thursday, happy Friday Eve. Tuning in to episode number 12 of the Assets Over Money podcast, man. Kev, how we doing, brother?
Hey man, I can't complain, man. We back in the building, doing things
Yeah,
we need to do. You know what I'm saying? It's Thursday. You know what it is, man.
for real. We got to do a PS. Before we do anything, we got to do a little PSA, man. Shout out to my boy Kevin. He got a laptop, 12 episodes. For 12 episodes, my brother finally has a laptop, man. No more vertical, all horizontal.
Nah, man. Hey, and to clarify, I had a laptop. It just the camera wasn't functioning the way it needed to. So, hey, we had to roll the way we had to roll, bro. So, hey, let's get it.
We gotta get it how we live, ain't it?
Yeah, boy.
But yeah, without further ado, I'm gonna tag my guy Brandon here. Brandon in here. We got a special guest for you guys, and just a quick bio for him. So Brandon has been transforming lives in the financial service industry since 2004, helping clients achieve their financial dreams through creative and tailored mortgage solutions. Whether it's residential or commercial financing, Brandon's experience spans traditional and non-traditional options, ensuring every client finds the best possible solution. So not to dig into your bio too deep, Brandon, we are so happy to have you on today, man. Welcome.
Yeah, I'm happy to be here.
Yeah, man. So I guess really, I know we're talking a little bit behind the screen, behind the stage. Really, just I guess tell us your story, man.
Yeah. So pretty much, I've been in the financial services industry since 2004. Worked a lot. Worked some in banks. After so long in the banks, I ventured out on my own. I ventured out to become a broker, so I went on the independent channel. Since about 2017, I've been on the independent side and started doing more with traditional mortgages and ventured into non-traditional mortgages and commercial stuff where people, do the fix and flips, anything with real estate investors. Working a lot with that, especially right now. So anything mortgage related, I'm able to do.
Nice, brother. Okay, and you're originally from North Carolina, correct?
Correct. Yeah, I'm from a small town outside of Charlotte.
Okay,
North Carolina. Where that small town at, man? Where that small town at, yo? Don't leave us short-handed, yo.
It's called Newton, North Carolina. If you heard of Hickory, it's right beside Hickory, so it's right up Highway 16, Brookshire. If you're from the area, it's right up the road. So
if you know, you know, yo. It's like Salisbury, man. If you know about it, you know about it. Just know it's a little hole in the wall, you know what I mean? But no, that's cool, man. So Brandon, so tell us about, what I'm saying, you're a lender. What type of programs do you have? How can you help investors and, talk about some of that programs.
So as a broker, I have a lot of capital providers. One of the most popular right now, a lot of people are gravitating to, is the high leverage, which is 100% financing for fix and flip loans. So investors that want to purchase homes and flip them, or purchase, renovate, and then rent them out. We can do 100% on the purchase price and 100% on the renovation budget. So that's probably the most popular. Second is ground up construction, and that's for new and experienced, by the way. You don't have to have experience to do the 100% financing. For the ground up construction, high leverage, 90% loan to cost. So purchase price plus the renovation, 90% of that. For experienced investors, they can get that at 90%. Other than that, I do have options where you can be a first-time builder or investor that wants to build a home. It's just going to cost you a little more down to do those programs. DSCR, 30-year loans for people that want to rent out homes or investors that want to rent homes. Have those. Can go past 4 units as well. I have clients that are looking at 6-unit properties. So all kind of programs. Then you have the traditional loans, of course, Fannie, Freddie, FHA, or conventional USDA, but focus a lot more right now on on the investors, working with real estate investors who want to flip homes or either rent them out.
Nice, man. Yeah, no, definitely. Oh yeah, Kev, you on mute, bro. I think you're saying something.
Kev, you on mute.
Rick, go ahead, bro. My fault.
No, you're good. You're good. Yeah. No, I was just saying, bro. I think that is awesome. I know for some of the folks listening, man, we got viewers from very experienced all the way to people who are like novice, let's say relatively new. So definitely want to get into some of those opportunities, some of those different types of loans that you have. I'm curious with that. I guess how did you get started in the mortgage space? I have a couple friends in that space, you know what I mean? And I know some of them got started for various reasons, but typically you see a lot of people within the real estate realm, they're either doing real estate themselves or they're trying to venture out and become some type of private money lender. So I'm just curious how you got started yourself, into the mortgage industry.
Well, I used to work in the banks, and I was in positions where I've always typically referred out the mortgages. So I was more of a generalist, and I didn't specialize or focus in them. And then I had a client who actually owned a mortgage brokerage firm, and so he talked to me more about it, and I was like, yeah, that sounds cool. So went and joined him. Did well, actually. Not surprising, because I felt like I was going to do well, but did well. Took off with that, and that was when I was doing just the traditional stuff. I wasn't really working with a lot of investors as I am now. Actually, didn't. It's funny. Kev was the one that got me to start working with investors when he was investing, and he knew I was in the business. He was like, hey, can you do these kind of loans? And I looked and I was like, yeah. And so was working with him, done a lot. He teaches a lot of investors. I've been doing so for a while. So I would, speak at his classes, and that business kind of grew just from there and got more interested in it. And so within the last, I would say, 2 years, I have gravitated more towards the commercial side, or more towards dealing with real estate investors and doing those types of loans. So that's pretty much it.
Nice. Okay. And with that, and so from banking, seeing it to being like, okay, I'm curious about it and wanted to actually get into it yourself. And once you kind of jumped into it, you kind of just said, hey, I'm not looking back to the bank, and put that to the side.
Yeah. I mean, in the banking, that was just, something I started out with, and I just, didn't know which way I wanted to take my career.
Right.
I did, I did some private wealth banking. I worked with a lot of people, and, did some financial planning and worked as an advisor. But ultimately, I came to this side and had some success, and, I like it. It's, you're helping people with the biggest purchase. That a lot of people, this is the biggest purchase that they'll ever make in their lives, right? So, you're still helping them, plan and make the right decision when it comes to picking the right loan program for them. So,
yeah. So for all our investors that's watching right now, or thinking about investing, or even thinking about buying a house or whatever you're looking to do, you're going to need financing, right? And so being that, I'm an investor, I know Richard is an investor as well. 100% financing right now is incredible. What would you say that's your best product right now? Or I know you got other products as well to help, leverage real estate and investors, but 100% is just blows my mind, right? I haven't heard of 100% since maybe 05 or 06. So it's just unheard of right now. So for the folks that are listening, this is major, right? Because now you can go into a situation where you don't have to bring no down payment, and the only thing you're paying is closing costs. Is that correct?
Correct. Of course, you want to have money to renovate. With the renovation, the way that works is you actually start. You put the capital up first, and let's say if you have a budget of $50,000, let's say you put $5,000 into it, then you can turn around and ask for a draw. So the company will reimburse you what you put out. When it comes to the best product, I think it's just depending on the person's situation. this product is really popular amongst new investors, just because most capital providers and most of my lenders will ask you to have 20 to 25% on the purchase price, just to get started. So this gives people an opportunity to get started with much less down on the home. So it's really good for that. I also have investors I was talking to a few the other day, and they were like, hey, we do about five a month, where we're looking to grow to 10 a month. So using the 100% financing will help us keep more money in our pocket, so we can actually go and get more homes, and renovate, flip more houses every month. So just depends on the situation. There's some people that they may not be looking for the 100%. They maybe look to take a different route. But I will say that's a very strong product. That's a really strong offer, 100% financing.
Now, when you said that they have to bring some of their own money to get the project going, now if they have a builder that's willing to work with them directly, they can have that builder get started the work, and then once that work is completed, they can request a draw. Is that right?
I guess if the builder is willing to front the money for that, I mean, it just, at the end of the day, it has to come from the client side. So the capital provider is not going to give you the money to start the renovation.
Right. So however you
if someone works it out with a builder to do that, then yeah, they can.
Right.
Buy
because the money is there, right? The money is in the renovation budget, so they can basically once that work is done, they can request that draw and they can get paid.
Right.
They may not even have to have that.
Right. It's going to come back once they request a draw.
Right. No doubt. So go ahead, Richard.
Yeah, and I was just gonna say for the folks out there, right? Like, I guess the question that kind of pops in my head is, let's say I have a house, is distressed and needs some work. I don't have any money. I'm watching this podcast right now, and I hear Brandon talking about 100% financing. What are the next steps? Like, can you walk us through kind of what the process looks like?
So you have a distressed home that needs to be renovated.
Yep.
Yeah. So we would talk. I would collect we would talk about the situation first to make sure it works, because you still have to have. I mean, the loan amount can't be any more than 75% of the after repair value.
Okay.
And for those that don't know, the after repair value is what the home's going to be worth after you finish renovating it. So as long as everything fits within guideline, we would start by taking. I would send you a list of documents that I would need to get started. We would get the ball rolling. Close these loans, within a week or two, for them to close and for you to get started. So once we close, you would, if you own the home already, then we could, if you purchase the home with cash, like I have clients that do that, we can refinance, which pull the cash back out from what you purchased it with, and then set aside the renovation budget. So once to close, you would then begin the process of renovating the home. And once you finish, you would either refinance into a long-term loan, which I can do, and I do with a lot of clients, or you would sell the house, depending on whatever your exit strategy is.
Nice. You make it sound so simple too. So I guess it is. I guess it's a little bit easier to pin it, right? So yeah. I know with a lot of loan products, right, people are, especially with the higher ones where you get to where people are offering 90% LTV or 100% financing and things of that nature. They're usually I've seen folks that are looking for people who have had multiple projects under their belt. Now, you mentioning people who don't have who may be new or novice to doing this. Are you guys doing things to kind of watch out for yourselves, right? Are you guys doing like credit checks, making sure verifying proof of income and things of that nature as well?
Yeah, there's definitely a credit check. Proof of income, no. On these loans, the income comes from the property. Mm-hmm. So, if it's on the fix and flip, the appraiser is going to go out. They're going to look at the property and kind of do a rent schedule or market rent and see what this property will rent for based on where it's at and homes that are similar to it. Mm-hmm. And as long as that meets the monthly payment, then it's typically fine. If it doesn't, then we may have to look at taking a different route. You may have to put something down. It just depends on how far it's off and what that looks like. So no personal income documents. You can literally be unemployed and do this, right? You can, I've got clients that, a lot of the real estate investors that I work with, they don't have the typical, 9 to 5, but they have capital and they can invest and they want to see their money work. So, it's, the program's out there, but, of course we want to look for people that, you want to make sure that it's someone that is looking to do right by the situation. So, I mean, it's out there for anyone who qualifies. So, it's not like it's just we're gonna handpick it or turn you down, but you just want to see that people are really doing what they're set out to do and not giving up on the project. So, a lot of that comes with, again, it's 70% AR. Loan amount can't be any more than 70% of the ARV. When these capital providers do that, then they're protecting you and themselves, right? They want to see that you're going to make a good investment, that you have room in this property. You got 30%, where if you go to sell it and the appraisal doesn't come back as high as what you thought it was, but there's still room, then you can still make money. Last thing you want is somebody upside down in a project, because that's when people typically want to walk away.
Mm-hmm.
So there's things in place to make sure that, or to do as much as possible to make sure that it's a good investment.
Yeah. And how are you guys typically, I guess, securing yourselves? Are you guys, like with collateral, or are you guys more so like personal guarantees? How are you guys kind of securing yourselves? So if something does go wrong with the, with the person who's fixing flipping.
So the last thing that my capital providers want to do is to repossess properties, right?
Right. Mm-hmm.
They're in it to make money. They're not in it to just go buy, to just get a bunch of properties, because they could just do that without investors. So it just depends on the situation. A lot of them will do as much as they can to work with you. So if it's these loans, like the fix and flip loans, are all short-term loans, anywhere from 6 to 12 months, sometimes 18. Mm-hmm. But if you're not finished with the project, let's say within the amount of time that the loan is set for, you can ask for an extension. The extension may cost, of course, because in mortgages, there's always investors behind capital providers, and so when these deals are made, these deals are made, and people are expected to get paid, even behind the scenes that you don't know. That's actually investors that's putting up money for these projects. So, so asking for extensions, typically they want something for extending that. But last thing they want to do is repossess the home. So, they'll work with you as much as possible, as long as you are, making strides to do what you set out to do.
Oh yeah. No, 100%. And the reason that question just comes from, because I know a lot of people who have tried their hand in lending, not necessarily as in the professional sense that you're doing it, where people try to be a private money lender, right, and newer to it, and try to lend money without necessarily securing themselves. And I've even been guilty of that myself, right? Think somebody, go out, lend some money, and end up losing the money. And that's why it's sometimes better to go through actual institutions or work through people who know how to properly vet and select, proper investors, and then also have the correct paperwork to secure themselves if things do go in the wrong direction.
Yeah. So and don't get into it. There are underwriters that are looking at each and every situation, and they're assessing the risk. So you can get denied, right? Like, it's not just everybody's approved, but most of the time, if the situation's right, if the home is right, the investment's good, and you don't have anything crazy, repossessions with it, something that would make them say, I don't want to really put my money out for this, then you'll get approved. And you go in a situation, if you get approved, I say underwriter, they've done what they needed to do to vet the situation. So at that point, it's on you to just finish the project and make it work. But there's a good chance that it'll work everything comes back, the appraisal comes back, the ARV, everything checks out, then it's a good chance that you'll be successful in that project.
Yeah.
Yeah. So with that being said, Brandon, like, all right, so we talked about that, the programs, we talked about the process. What's your ideal client? Like, you know what I mean? Like in what you would prefer to see with your clients when you bring them in, they have a contract and they want to fix and flip, or they want a new construction. What's your perfect ideal candidate for these loans, and your perfect client? What are you thinking that, yeah, like the perfect client, if you can get them every single month and they get multiple loans from you, what would they need?
So I don't think so. I don't. What I look for is like the person, right? What I like is the person, right? So optimistic, right? More glass half full than half empty, right? So and somebody that's going to go out there and try to make this happen, make it work, and because you can, unless you get discouraged, then you could end up not making it happen. So I would say somebody that's again optimistic, ambitious, motivated, and ready to work. Everything else I can work through. If there's you don't have to have perfect credit. You don't have to have the most money. I know some people would say, "Oh, I want to have everybody I work with have $1 million or so." I don't care what you have. I mean, as long as you have enough to make it work, I want to help people. So you don't have to be in the best position for me to say I like this client. You can be, in a position that just makes it work, and the loan doesn't have to be the biggest loan. The home doesn't have to be the biggest home. As long as you have success, and I can help you with that. That's what matters to me. Everything else falls in place.
So if I'm hearing this correctly, you don't want any Debbie Downers, right? You don't want the ones that are gonna come in and be a victim mentality. They got a bad attitude. They're not ambitious. They're looking at the cup empty.
So typically, those people aren't going to want to. They're not going to be investors in the first place, right? Because you're investing, you're taking a risk. So somebody like that usually going to scare themselves away from real estate investing. So I would say most times when people talk to me, they sound optimistic and motivated and inspired and ready to take on the world, right? So, but yeah, I don't want. I mean, if you're scared to do, I don't want anybody that's scared to do a project or to invest to get in. I don't want to put anybody in a situation that they're not ready for. When I help someone, I want to make sure that they come out. It's not just about me closing the loan. I want to make sure that they're successful in what they wanted to achieve, and they continue to do that and grow.
So really, it's about the relationship piece, right? You want to help them grow. We're helping each other grow. You know what I mean? I mean, we always talk about on this station how relationships make it go round, right? So,
Right.
what would you say is your biggest? I mean, I guess your biggest attribute when you're going in and you're helping these people and you're being that problem solver for them. What does that do for you? And how does that make you, feel like you want to come back to them and bring them more business and give them a program that can, help fix their problem?
I mean, what it does for me, I mean, it brings me fulfillment, like joy, right? Because I feel like everybody's put here to do something and have a purpose, right? So if part of my purpose is to help people be successful at investing in real estate and whatever else I do, then anytime that is successful, that brings me joy. So yeah, I mean, if I can help somebody, I mean, there's obstacles that we have to hurdles that we got to cross or jump through or whatever. I'm willing to help as long as the client's on board. Yeah, anything I can do to help someone be successful at what they want to do is a win for me in my book.
Yeah. Yeah, and I actually got a question going back to one of the products you mentioned earlier. I think really the last a few years, I mean, I've started to see it become more and more popular. The DSCR loan. So for those that don't know what exactly the DSCR loan is, could you just kind of dive into it, what it is, and how it kind of
Yeah.
works?
Yep. So DSCR stands for debt service coverage ratio. Um, this loan is strictly for real estate invest or for real estate investors, right? So it's a loan that you can obtain without having proof of income, things like that. As long as you have the credit score, um, the cash that you need to close, then you can buy a rental property. The property has to check out. So the income, the reason why capital providers or lenders don't look at your income is because they look at, like I said earlier, what the home's going to rent for. So as long as the rent would cover the mortgage, then they're fine. There are some, and I have some capital providers that will do it even if the rent doesn't cover the mortgage. Of course, that's with more money down, things like that. But that option is out there. But typically, most of them like to see that the market rent for that home is going to be more than what the mortgage payment is going to be. So it's a much easier way to obtain a rental home rather than going the traditional conventional route. Just because your debt to income, those things aren't counted like it is when you're doing a traditional mortgage. A lot of or most of the lenders or capital providers want to see that you close this loan in a business entity. The most popular is an LLC. Typically, like 90% of my clients would have an LLC that they close in. And this, of course, protects the client if something happens and someone comes after the property or comes after you personally. It's separate from your personal and the property. So that's a really popular program. A lot of people are taking advantage of it. I think I don't know the last time that I've done a conventional investment loan for a client versus the DSCR.
Right. And just to kind of add,
And another thing with the conventional route, you can only have so many loans.
yep.
DSCR, you can have as many as you can afford.
Yeah. And I was about to say exactly that. So I'm glad you said that. And with a lot of those DSCR loans too, because we recently did one, me and a couple of my friends from college down in Alabama a few months back. It was a relatively simple process, right? After you do, you apply for a couple loans in the past, you already pretty much have your documents ready. They're going to run a credit check. We had to provide some of our LLC documents, things of that nature. It's just making sure you have your documents and things like that on hand. I know you could talk more to that piece, but literally we found a home. I think we got under contract for right around $100,000. I think the appraisal came back at I want to say 130-ish, 120, 130, something like that. And it rents out for right around, 12 or 1300. And it was simple. And the money we used for a down payment was private money. So essentially we didn't really come out of pocket, anything to buy that house. It works.
Yeah, it does work. Most of most of my investors, they use it. They've used it. So I'm an advocate for the program. I like it. I like those that type of loan for investors. I think it makes more sense to me. So.
I mean, and then with the 100%, I mean, just imagine, Rick, like if you had the 100%, you wouldn't even need to go to the private money to get the down payment. You know what I mean?
Yeah.
All you got to come to the table with
So
is closing.
So let me speak to that. So there's a strategy if you find a place at home that you want to rent out and it needs work, we can do the 100% financing. Once we do that, once you finish the renovation, the home should be worth a lot more than quite a bit more, or at least 30% more than what you financed. So at that point, when we go to refinance into the DSCR loan, you don't typically have to bring money to closing because we can roll that into the loan because of the equity that's in there. So a lot of people do use that, as Kevin said, they'll go 100%, then they'll come back and do refinance, if they're going to keep, if their exit strategy is to refinance and keep this home to rent out, you can do it without bringing money to closing, as long as the equity is in the home, like it should be.
Nice.
Yeah, that's sweet right there, man. I mean, you know, you can do more. That's allowing you to do more deals. So you new investors out there, you can get 100% financing. That means that I don't have to bring money to the table. That means I can go do something else, go use that money and buy another property and another loan. And with, you know, the commercial loans, you can buy as many as you want. As long as you got the capital to provide, or, you know, whatever you need, you won't need a down payment. So it's just, I mean, it makes a lot of sense, man. And, you know, I'm glad you're on today.
Yeah.
It makes the most. Yeah.
Yeah. And I would say with that, man, a lot of folks, right, and just 100%, like, just be 100% valid, right? And you correct me if I'm wrong. A lot of sometimes when people look at 100% financing or finances where you get a large percentage of it covered, a lot of people will say they will not do it because of, you know, the interest rate that may be involved, because the interest rate may be higher. It's more risk for the lender. Is that usually the case with you guys, the interest rate being higher, or is it usually pretty competitive comparatively?
I found that so the interest rates on these 100% financing loans from this capital provider, it's not really, it's within range of if somebody put down 20-25% with other capital providers that I have. So it's nothing like it's jacked up. So just to be clear, so the rate range is typically somewhere between 10 to 12%. On any fix and flip loan, you're going to be right now in that range regardless. Like that's where we're kind of starting at.
That's awesome.
Yeah. So, and it's funny because I can tell when I have new investors, because they'll harp out. They're like, "Hey, what's the interest rate?" And I have to explain to them, "Hey, when you're doing these short-term loans, the interest rate isn't. That's kind of like one of the last things that you wanna know. It's not. I mean, it's not first, right? Just because it's not a 30-year loan. Like you're talking about, I have people that get these loans and they renovate the properties within 2 or 3 months. So those people make like 1 or 2 payments, 3 payments, and then they're out of the loan, right? So, you know, of course, 10, 12% sounds high, but if you pay that for 3 months and then you put the property, you know, sell this property, make $50,000. I mean, the difference in that 10, 12% versus most people are thinking that they're going to get, you know, 7, 8%. The couple $100 difference is not a lot. That's pennies compared to what, I mean, I could see if you had 10 to 12% for 30 years, that's a whole, now we're talking a whole
different conversation. Yeah.
So the normal range, like again, they're within range. I mean, that 10 to 12%, 13%, that's normal for, you know, these types of loans. And it's so short term that lenders, they're not making a lot of money off this interest. So it's not like, I mean, that's part of the reason why it has to be that high, because you're only paying the loan for so long.
Yeah. No, I like that, man, because I've actually believe it. I've seen decently higher. So I think that's pretty damn good. You know what I mean?
Yeah. No, it's solid.
Yeah. For sure. So Brennan, I know we talked about the process before, but I mean, let's start at the top. So say if I have a contract right now for a house fix and flip, and I bring to you, how's that process look, and how long is it going to take me?
If you're looking for 100% financing, and we get the 100% financing, then they move pretty fast. Typically close within a week or 2 at the most. That's just, you know, you bring the contract to me. Hopefully we've already spoken before you bring it. I do have some people that just show up with a contract and I'm like, wow, I don't even know, you know, what this is about. But, you know, you bring the contract, you have your scope of work. So you have an estimate from the contractor on what they're going to do to this home, the improvements they're going to make, and then how much it's going to be worth after it's finished. Other documents, you know, articles of incorporation, things like that, certificate of good standing. So I'll get these documents from you. We'll get the ball rolling. You pay for appraisal. You know, typically appraisal somewhere around $600 to $800. Once you pay for the appraisal, you know, full credit, everything's, you know, getting ran. Appraisal set up. I typically want to have all of the documentation that I need for the loan before the appraisal gets back. So once the appraisal gets back, everything goes back into underwriting and it buttons up. We close this loan, and then after we close the loan, the money is set aside for you to start taking draws as you start completing stages of the renovation process. Once you complete the renovation process, then you decide. Well, if your exit strategy is to refinance, we'll start that process. If your exit strategy is to sell, then you put the home on the market, flip it, and make your money. Come back to me and do some more deals.
So that sounds sweet right there. I mean, that sounds pretty easy for the folks out there. Now, I know you said they need a contractor. Does that contractor have to be licensed and bonded, or can they just go get an estimate from anybody, or what are the people they need to be licensed?
Yeah.
Talk to me about the folks that they're going to need. Right, we know they're going to need the attorney.
The contractors aren't vetted the same way that they would be if I do it as a traditional loan, as conventional FHA. But I will say to any investor that you want to make sure that you pick somebody that's capable of doing the job, right? So you can hire a handyman, but if they're not used to if this is out of their scope, that's not somebody that you want to take a risk on giving money to complete a job for you when you're investing. So you typically want to do, as an investor, I would say you want to do your research and make sure that this person or this company can get this job done successfully, because part of your success in the project, a big part of it is them. And so once you start giving the contractor money and stuff like that, that money's you owe that money to the lender. So it's money that's spent already. So if you can't really get a refund on that unless you get it from the contractor. But
so you're saying that you want to make sure your contractor is licensed and bonded, right? I mean, I would think so. You wouldn't want to hire nobody that didn't have no license and didn't have no insurance, and if something happened,
right. You want to. I would say so. You want to check and make sure they got the experience. They qualify. I mean, everybody. Some people might know people that can do a job, and maybe they're not bonded or whatever. If they want to take that risk, that's on them. But I would recommend that you want to make sure to the utmost that person or that company qualifies and meets your standards of getting this done, because it's on you. Once you borrow the money, it's on you to pay it back.
For sure. So, all right. So I know we talked about the best candidate, what I'm saying, that you would want for a client. What is the worst candidate? If someone brings you a package, what do you don't want? What is it that you don't want them to do?
I don't like saying the worst. I don't really like saying the worst candidate. What I would prefer, I guess, not to have is the opposite of what I said I wanted, right? So someone who's not ambitious or not optimistic that they can get the job done or move forward in investing. If you're really scared or if you don't want to take on the risk, then I would say that that's not a good person, because again, I don't want to put anyone in a position that they don't want to be in. I would say that more than I would say. I don't like to say anybody's situation is it makes them the worst candidate and things like that, because people go through different things. And so,
it's some worse and bad candidates out there, dog. Go ahead and tell us. Tell us the
truth.
No,
I mean, again, I don't like to judge. I mean, you never know what somebody's experiencing. Life hits everybody differently. So I'm not gonna say that makes them the worst because of something they've been through. I think that it's really more about the person, the individual, and how they want to do it. Like if you're scared to dip your toe in the water, then let's not do it. I don't want you to. I'm not here to talk anybody off the ledge. I want people that's ready to rock and roll and to get this stuff done or to do things. And so that's more of a best worst to me than any kind of situation that somebody may have.
Understood. So since we talked about that, I know when people come to you, they need a package, right? So they need a package of items, like say they need their contract, they need a CMA. I know they need the scope of work. What else? What other items do you need for them in their package to get going and to get the ball rolling once they have that contract?
So I wouldn't say they need a package, because most people that come to me, they don't have the contract. Like we talk before they even go into investing. So there's no package. There's no contract. So a package before, and I tell them what they need, because most people don't know what to come with. So, it's the entity documents, right? So it's the articles of incorporation, the organization. It's the certificate of good standing, that your LLC is able to do business in the state that you're doing business in. It's ID, driver's license, bank statement. They're gonna want to make sure that the money is there for you to do the project, right, and close on the deal. Other than that, I mean, that's more kind of upfront what I would need or ask for. Then after that, EIN letter. Sorry, also for the LLC, for the business entity, an EIN letter. Also operating agreement. And then once they find the home, or they go under contract, if they're not already under contract, then of course the contract. I don't really need a CMA. I mean, that's on the. I never turn those in. The lenders or capital providers don't ask for that, so I don't need a CMA. It's good for the client to have, to know what they're getting into, and then that's it up front. And then anything outside of the normal documents I collect would be something that the underwriter sees in the deal and makes them question something, and so that makes them ask for something else that I may have not asked for up front. And so that doesn't come until they start digging. And that's just going to vary depending on what they see. Everybody's situation is different. So, if they need a letter of explanation because, they saw something in the past on your credit or whatever, that's just going to be up to them, and what they like to see and get to put in the file.
Understood. Okay, so you're saying they don't really need a package like that. And for the newbies out there, a CMA is a comparative market analysis, right? So if you're going to go out here and you're flipping a house, you want to know exactly what's selling around you within a mile radius, so you can kind of come up with the value of the property. That's a CMA. So he's saying that you don't need it for him, but you need it for yourself to kind of understand what the value is. So I get that, and I appreciate that, Brendan.
Yeah.
Man, I'm just thankful to have you, man, because like I say, for any newbie out there, any seasoned investor that's buying a property or looking to flip or build, you're going to need financing, man. Brandon can get it done for you. You know what I'm saying? I've been knowing Brandon for quite some time, and he's always been good with the lending. So if you need a loan, you need to get it done quick, come see him for sure.
For sure.
Yeah, sir. Yeah, and I think really transition before we hit the end here. I guess, man, I love to hear about like goals, because you seem like a kind of like a silent assassin, like you play the background. I don't know if that's just a front, you know what I mean? It could also be you, man. So I guess goals, man. What are some goals or some things that you're looking forward to? Because I think that things are definitely changing within the world, within the country, from a financial standpoint. Whenever there's a shift, there's a lot of opportunity, or there's a lot of not opportunity. So I guess, what are some of your goals or some of the things that you're looking forward to, this year and maybe the next couple of years as well?
I say this year is to of course there's a big shortage in homes. It's kind of a crisis, right? And so that is part of the reason that the home prices are up as high as they are, home values, which is good depending on which side you're on. But so a lot of these investors that do these fix and flip loans or ground up constructions, they're investors. So what they're doing is they're providing housing for to provide more housing. So if they can take a distressed home that normally wouldn't be on the market, put some TLC into it, turn into a home that someone can buy, and their family now has a place that they can call home. The more I can help someone do that, the better I feel, because I feel like I'm helping with part of the problem. So I would say a goal is to help as many investors, and not just investors, but and as many people that want to get in homes or invest in homes, is to help as many as possible. Um, Another piece, again, I told you I'm getting deeper into the commercial space. So even financing big multifamily homes. And I'm not saying, when I say multifamily, I could of course do the duplexes and the triplexes, quadplexes, but I mean, hotels or apartments, 100-unit apartments and up. And it don't have to be 100 units, but it can be 15, 20 units. So digging more into that and getting into that market is a big goal of mine this year. What else?
With that, is there any particular reason why I guess that you're trying to get more into that?
It's kind of been like a natural progression, because I mean, dealing with investors. I mean, I've had people throughout the years just ask me, hey, can you finance this, or can you do that? And so, or they'll know somebody. So, just clients, and I work with agents. Even some of my, again, I worked in the banks for a long time and stuff. So I got financial advisors or commercial bankers or small business bankers, branch managers, everybody that reach out to me and ask me, hey, I got this client that, we couldn't get this approved. Do you have a solution for them? So when that stuff comes across, it's just been, throughout the years, it's been more and more of it that I've been seeing.
Yeah.
So I'm like, I'd love to see what that's about as well. So anything I can do to learn and grow, it's always any kind of challenge or something like that. Like I like it. So
Yeah.
That's just part of that. It's just kind of, I feel like I've been gravitated towards doing that as well. So
Nice. Yeah. That's awesome, man. And I guess really last question, man, is for anybody out there who is looking to maybe, for at least last question for me, Kev, you may have another one as well. For anybody out there that's looking to get into the lending space, do you have any, I guess, piece of advice, or where do I start? Is it a book? Is it follow Brandon for loans on Instagram, or is it where do I start?
So there's no one way. I know how I did it, but there's all kind of different paths into getting into lending. I mean, I did it. I started out, again, working in the banks and learning and growing through that. That's a way that you can do it. You can reach out to a local mortgage broker and see if they can train you or put you on as well. The biggest thing, though, I would say is this: whether you work for a bank, whether you're independent mortgage broker, whether you own your own mortgage brokerage firm or whatever, you're really an entrepreneur. You're self-employed for the most part, because you have to go out and get business. And so you want to, if you can, have as much capital as possible set aside, because you getting started, you want to get you may not close a loan. I don't think I actually ended up closing a loan 3 months after I got into it full time. I closed the first loan, and then I didn't close another one for another 3 months. But after that, it was rolling. So you just never know your path. For me, I didn't come into doing mortgages from being, from doing construction. So I had a financial background, and I had, Series 7 license. I was in positions that required a lot more than what it requires to do mortgages. So it was easy for me to pick up and do it. A lot of those terms and stuff I already knew anyway. So that was easy for me to talk to real estate agents or any kind of referral partner, so they can understand that I have the knowledge and what it takes to do business and close it. So I think it depends on where you're coming from as well. So if you don't have a financial background, things like that, then you probably want to try to get in and start learning as much as possible um, as you can about lending and mortgages and how it works. If you got a financial background and you maybe in a position or you're a banker or something, I would say just again try to see if the bank will let you take a role in the mortgage space. If not, maybe an independent mortgage brokerage company or something like that. You can talk to them about starting with them.
Nice. I appreciate it, man. I think that's helpful. You gave a lot out there, man. Kev, do you have any other questions, brother?
All right. So before we leave, if you can go back and tell your 18-year-old self something, what would it be?
It's probably, it's a lot, right? Let me see. My 18-year-old self, I don't know if he would have listened, but I don't know. That's hard. I would say, yeah, I know what I would tell my 18-year-old self to think even bigger, right? I think most people are limited in what they can achieve or do because it starts with your mind and what you envision. So, I never thought small, so I won't say that, but
yeah,
I would still say, Brandon, think even bigger, right? So, that's what I would tell my 18-year-old self.
Think bigger. No, that's good.
Yeah.
Yeah, that's awesome, man. Hey, well, Brandon, bro, do you have any last parting comments before we wrap it up?
Nope. Well, I'll say if you can reach me on Instagram, Brandon 4 Loans. I have some content on there. I haven't done any in a while. May get back into it sometime soon. Telephone numbers 336-382-0139. If you reach out to me, I'd love to help, and I'd be an advocate for you and trying to achieve whatever you want to achieve with real estate investing or purchasing a home.
Awesome. Well, hey, thank you, Brandon. It's been awesome. Please stick around. We're going to the back room at the end of this, man. Thank you guys for tuning in. This was Assets Over Money podcast episode 12. We see you guys in 2 weeks. Peace.